I think that also that our Korean audience is interested in your view, global market, inflation, so on. So what do you think about the outlook of in the global financial market?
The state of the world.
Yes.
Well, we've gone through very difficult times, and I don't need to tell you all about that. And the Korean stock market suffered in the last 12 months, but so did every stock market in the world. It's been a very difficult time, and we know why. We've had a long period of declining inflation, which was accompanied by declining interest rates, and those were perfect conditions for capital markets, bonds and equities. And indeed, the bond markets became ridiculously expensive because the capitalist system cannot function properly if the cost of money is negative. It leads to a misallocation of resources. Money must have a real price. If it doesn't have a real price, then you get misallocation. You get zombie companies that survive. They shouldn't survive, but because money is free, they are able to survive. So we had that distortion. And then, of course, we had this terrible war in the Ukraine. And we had the price of oil rising up. And so a combination of these factors has caused a period of stock market weakness. And then we had COVID.
That's right.
And COVID initially caused a very sharp recession. But to be fair to central banks around the world and governments, they understood the lessons of history and they moved aggressively to support economies. And so what could have been a global depression actually was a very short recession that only lasted about 5 or 6 months at most.
That's true.
But they injected a lot of liquidity into the system, and so all that money pushed equity markets and bond markets to levels that were too high. And so now we are in what I call the hangover period. We had a party, we had too much to drink, we enjoyed ourselves too much.
That's true.
And we're now suffering a little bit. However, that provides the opportunity. And in fact, the Korean stock market, in my opinion, is now one of the most attractive in the world if you are willing to take a 3 to 5 year perspective. I always like to tell investors, I have no idea what the stock market is going to do in the next 3 months. It can go up, it can go down. Anybody who thinks that they can forecast the short-term movement of the stock market is either an idiot or a liar. So when we talk about investing, we're talking about a long-term point of view, and I would say a minimum of 3 years, preferably 5 years. It is on that basis, with that time horizon, that you can identify really attractive investments.
This is a very fundamental issue, and when I'm in Korea, I'm telling people you have to stay long-term. Don't trade, keep buying for your retirement. And people say that, maybe maybe true for U.S. case, U.S. investment. But some say Korea is different. In Korean investment should be rather short term. What do you think? What's your opinion?
My opinion is that stock markets have a fundamental character anywhere in the world.
Sure.
Whether it's in Korea, whether it's in Europe, whether it's in North America, whether it's in South America, whether it's in Australia, stock markets are driven on the one hand by emotion, by greed, by fear, but at the other end of the spectrum they are driven by fundamentals,
sure.
Valuation. Companies can be too expensive, companies can be too cheap. Often companies are reasonably priced because the stock market's actually quite clever and well informed. But what we know is that if you have a portfolio of companies that and they are carefully selected, and you over time evolve the portfolio as the companies themselves evolve, some companies are not successful. Other companies are very successful.
Sure.
You can make adjustments. But over time, if your portfolio is actively managed, you can have a very low risk way of investing your savings over the long term. But it must be a diversified portfolio. I would however wonderful a company is, I would never suggest to anybody to put all their investments in one company.
Sure.
I think a portfolio should have at least 20 and probably 50 different positions. That way, even if one of them does go bankrupt, and it can happen, if it's only 2% of your portfolio, it's not going to do you a lot of damage. So fundamentals, valuation, and diversification are very, very critical to successful long-term investing. And so the short-term stuff is for speculating, it's for gambling, it's very risky. I'm not saying it's impossible. Some people are good at short-term investing for a time. But I can assure you, and I'm speaking now with over 50 years of experience, that you cannot succeed on the long run trading markets in the short term. You'll win sometimes, you'll lose other times. Much better to identify the highest quality investments you can and invest in them with a long-term perspective. And that way you will look after your savings, you'll look after your pension plan, and you'll make so much money that your children and your grandchildren will be able to inherit even after you've used up your own pension plan.
Let's say if you are 30s
Yes.
in Korea, then how do you prepare for the future,
Yes.
for the financial independence?
Yes.
What do you suggest?
Yes. I mean, it's always when you're young, you never have enough money. You always want to spend it on other things, entertainment, boyfriends, girlfriends, travel, and I wouldn't. I'm not a Calvinist. I think life is to be enjoyed, but you also should plan for the future. And it's very important that you don't have a miserable old age. You should have creature comforts as you get older.
Sure.
Once you retire, you have less income. And so you have to have savings. And when you are 20 years old, 30 years old, you think you're going to be 20 and 30 years old forever.
Right.
But I got news for you. We all get older. There's nothing we can do about that. And so the sooner you start getting into the habit of saving, then the easier will be your old age. And you don't have to save a lot to start with, but if you save maybe 10%
Right.
of your after-tax income, and then if your income goes up, maybe you can save 15%. But if you do that on a regular basis, then it becomes very significant. And as we all know, 15% a year, it means you double your money, double your savings every 5 years. And the compounding effect is so important, and one doesn't realize it. I would also emphasize that dividends are also important. You know, we all tend to, those of us who enjoy and are active in stock markets, we always look at the movement of the share price, we look at the movement of the stock market. We tend not to think about the dividend. It's kind of boring. It's like a rate of interest on a bond. But actually, it's very important, because companies, and it's important that companies, if they have surplus cash, to pay a dividend and to distribute it. And over the long run, the dividend income becomes a very important part of your total return, your total savings.
Good. I said exactly, reinforcing your statement that I telling Korean young generations that don't drink too much coffee. Spending, $10 per day could be a lot of money after 30 years. I said, to give up small coffee can make you much better off in 20 years later, 30 years later.
Yes.
A lot of people laugh at it, but I'm trying to say that even giving up one small spending could make a difference.
And I would put, before giving up the coffee, I would give up smoking.
That's right.
Because smoking actually damages you.
Right.
I mean, the only thing that smoking does is it makes your pension planning easier, because you're not going to live so long.
My God. And also, as young people, my experience in U.S., when I was young, I didn't have money. I couldn't afford a car. But in Korea, many young generations just drive a car, even if the Korean, mass transportation system is, quite good.
Yes.
So I said, to postpone the buying a car. It could be a, very good advice for your future. And also that people are interested in the U.S. market and Korea market. What's your...
Yes. Well, the U.S. market, everybody is interested in. Why? Because it's the biggest stock market in the world, and the U.S. is the biggest country in the world. And what happens to U.S. interest rates and U.S. monetary policy affects everybody. And so, I didn't really answer your earlier question about the state of the world. So let's talk a little bit about prospects for the U.S. stock market in the next 18 months or so, and what are the major driving factors, and what the issues are. And so the biggest issue is the concern about inflation, which has raised its ugly head again over the last few years for a number of reasons. And the US Federal Reserve, in my opinion, was quite slow in understanding and appreciating that these inflationary pressures were building up. And they were exacerbated by the end of COVID, and everybody started returning to normal life and spending money, the savings that had built up during COVID. There were supply chain disruptions caused by COVID, so there were bottlenecks. So there was shortage of supply, and that pushed prices up. And then, of course, we had the Ukraine war outbreak, the impact that had on oil prices. So all these different factors caused inflation to accelerate. And we had enjoyed in the last 30, 40 years really unusually low inflation of 0 to 2%. And so all of a sudden, and it shouldn't have been, but it was, all of a sudden, the Federal Reserve realized that the horses had bolted, the horses had come out of the stable, and they were late. And they had to catch up.
That's right.
With the horses. And so then they very aggressively, this year...
Trying to catch the horse.
trying to catch the horse by raising interest rates. And they've raised their interest rates quite quickly in 75 basis points steps. And of course, that has challenged capital markets, bond markets, and equity markets. So the $60 trillion or won question is, when do they stop this aggressive program of raising interest rates? And what is the risk that now that they've raised interest rates as much as they have, that they will trigger a recession?
For sure.
The ideal solution is what is called a soft landing, which is to say that the economy slows down as a result of these high interest rates, but doesn't actually tip into a recession. I can't tell you, and I'm sure the Federal Reserve can't tell you, whether or not they will succeed in avoiding a recession. There are too many variables, too many unexpected factors, both on the demand side and on the supply side. And we have the uncertainties of war, we have the uncertainties of the impact of COVID in China at the moment. We don't know what Xi Jinping's real intentions are vis-a-vis Taiwan. There are many worries and concerns out there.
Unknown factors.
Lots of unknown factors. My guess, my best guess, is that that already we have seen the peak in short-term cyclical inflation, and oil prices have come down. The prices of second-hand goods in this country have come down. There's been so much build-up of inventory. There's too much inventory. Inventory clearance so there are lots of factors to argue that in the next 6 to 9 months we will actually see lower inflation, and that therefore will encourage. And I'm sure, even though the Federal Reserve in its latest pronouncements has said that the rate of increase in inflation is slowing, they haven't said inflation is declining yet. But instead of increasing interest rates by 75 basis points last week, they raised them by 50, which is an early indication that they think the pressure is off. So the question is whether they will keep interest rates too high for too long and cause a recession, or whether they will very cleverly, or by luck, and it's more by luck, reduce interest rates at exactly the right time so that they avoid a recession and we get a soft landing. Nobody, in my opinion, can forecast exactly what's going to happen, but something like that is going to happen. We hope that it won't be, if it's a recession, we hope it won't be a long, hard one, that it'll be a gentle one. Ideally, a soft landing where we actually avoid a recession, things just slow down. But in any case, whether it's the first, the second, or the third alternative, if you are willing to take a 3 to 5 year investment perspective, it doesn't matter. The companies that you're investing in are going to survive because in my world, you've selected the companies that you're investing in.
Right, the fundamentally strong companies.
Fundamentally strong companies with decent balance sheets and so forth. If we have a recession, then their profits will suffer in the short term, and the share price won't do very well for the next 6-9 months or so. But it doesn't matter, because we're not investing for the next 3 to 6 months. We're investing for the next 3 to 5 years.
But many people, including Korean investors, are arguing that, it's more likely that we're going to have a recession and then companies will suffer. Why don't I sell all my holdings right now? Wait for the economy to recover. So I'll sell everything I have now. And then, economy picks up, then I'll invest. What do you think about it?
I think that's a wonderful idea if you are 100% sure that it will happen. You don't know. I don't know.
Right.
Nobody knows
whether
you're going to be right. And so let's assume that you're wrong. and that you hold back and you're going to you sell everything now. It's a bit late after the decline you've already had,
Right.
but you sell everything now because you think you're going to get a better opportunity in 6 months' time because the market's going to go down because of the recession. But let's say you're wrong and the stock market doesn't go down,
Right.
or it only goes down maybe 5-10%, and you don't think that's enough because after all you sold all your investments. You want the market to go down at least 30-50%, so you can then very cleverly buy all these shares back at the bottom.
Right.
Anybody who thinks that they can identify market bottoms and buy at the bottom and sell at the top are complete fantasies.
Yeah, that's my problem. The convincing people that don't time the market.
Don't time the market.
Yeah, just stay invested. But people listen to me, but not from the heart.
Yeah.
Okay, I think I know that where is the bottom, where is the top. But I think there's a discipline that after 50 years of experience, it never works.
You cannot invest from the heart. You have to invest with your head.
That's right.
The heart is emotion.
That's right.
And investing can be very emotional if you're right or if you're wrong. And it's wonderful if you make a lot of money, and it's terrible if you lose all your money. But you don't have to go through that pain and that joy if you are disciplined about it. And what you do is when things are tough and the environment is difficult and everybody is negative and pessimistic, that's when you buy. And if there's an extraordinary bull market, you may want to take some profits off the top. But, and this is a very, very important point, there are lots of, and you can do the arithmetic and the exercise yourselves, but there are lots of analyses that if you look at either a 5-year period or better, a 10-year period or a 20-year period, and you calculate what your return would have been if you missed the 10 best days in the stock market movement. Because the more of the 10 best days that you missed because you were trying to market time it, the lower the long-term return.
Sure.
Because you missed all those good days.
Yeah.
And nobody knows when the 10 best days are going to happen.
Right. And there's a really, really big difference in terms of the performance.
Yes.
Even 5 days.
Yes.
It's a total different story.
That's exactly
Yeah, right.
And to me, that is the most powerful argument against market timing. Because if you missed 5 good days, you've damaged irretrievably.
You never can recover.
You can never recover what you've lost.
Right. That's right.
And it's something that people, I understand that they
They
haven't
become emotional.
had the experience, they haven't done the arithmetic, they haven't looked at the history, they haven't gone through the exercise. But it is the case. You cannot afford, the more good days you miss, the worse your long-term performance. It's very logical.
Sure. Still, you didn't answer my question about Korean versus U.S. market.
Okay. So as of now, the Korean stock market is much more attractive on a valuation basis. And so I would confidently argue that on a 3 to 5 year view, a carefully selected portfolio of Korean equities will outperform the US stock market. The US stock market has done remarkably well in the last 10 years. And even with its 18% correction or so that we've had, and it's actually a bit less now, it's still been a very unusual period of outperformance by the United States. Emerging markets, Korea, but other emerging markets have done surprisingly poorly, despite quite good fundamentals in some of the emerging markets. I always think it's important when talking about emerging markets to be specific, because there are huge differences between, on the one hand, Korea, Taiwan, Indonesia, versus, say, Argentina, Greece, countries that are really very poorly managed. And so just like stock selection is important, country selection, particularly in emerging markets, is very important.
I see.
But no, I think Korea looks really very intriguing these days.
But I think that there's a pros and cons, and then like 30 years, 40 years ago, you see the opportunities coming from Korean companies.
Yes.
But I think that Korea is in the stage that for the next 10 to 20 years, I think very critical, I think.
Yes.
But I think that my opinion that Korean companies more concentrated in manufacturing side, but now they have to look at the financial industry.
Yes.
The importance of financial industry.
Yes.
So do you have any opinion on that?
Yes, I think you're right, John. The Korea, even though it's included in the emerging market world, is not really, in my opinion, an emerging market anymore. When you think of the sophistication of Korea's leading companies, these are world-class companies, and they have the sophistication of world-class companies, and their technology in various fields, particularly in the field of semiconductors, electronics, artificial intelligence, biotechnology, pharmaceuticals. These are all cutting-edge, modern industries that Korea happily has evolved into, and I would say has evolved into them more successfully than Japanese companies. I think that Korea has the advantage that on an individual basis, in my opinion, it's always dangerous to generalize, the Koreans are much more entrepreneurial. Korea's biggest challenge is one that they can do nothing about, and it's the same challenge that Japan is facing, it's the same challenge that China is facing, and that is demographics. It's this aging population. And with an aging population, by definition, with slower population growth and actually with population decline, you have lower economic growth.
Right.
And so that makes the environment a much more challenging one in which to invest. That is the advantage that the United States has, because it still has a population that is growing and it is quite young. And the United States also has a big advantage that it's just such a big place that there are many more opportunities and more money is spent on research and so on and so forth. So you're right, Korea does have its own problems and its own challenges. It also has this big elephant next door, which is China.
Right.
And China, in my opinion, is a combination of opportunity and threat.
That's true.
And so while there are clearly investment opportunities in China, I would be careful. I would not have too much exposure, because China is, in my opinion, particularly with the current government, unpredictable. And any country with authoritarian rulers you're too exposed to the decisions of a small number of people, if not of one person.
That's right.
And we do have this confrontation. Some people call it a new Cold War between Western liberalism and capitalism, represented by the United States, but also included within that all the liberal democracies on the one hand, and of course China and to some extent Russia on the other side. And so the neighborhood of Northeast Asia, with Korea, North Korea, the Taiwan problem, and
Japan,
China, and Japan and China. It's a challenging neighborhood, shall we say. But I also believe quite strongly that the liberal democracies, or the democracies, whether they're liberal or not, one can debate.
Freedom.
That's right. As long as these countries work together, cooperate together, strengthen their defense alliances, I think it's very encouraging, for instance, to see that Japan has finally agreed to spend more on its defense. And it's not because the Japanese want to invade Korea again, obviously not, but they want to protect themselves from China, and they want to be able to protect the sea lanes in the Western Pacific. So I'm an optimist, and I see improved relations between Japan and Australia, improved relations between Japan and India, and I hope that we will see, and I know the history, that we will see improved relations between Japan and Korea, because it's in everybody's interest to have a unified front against China. And we need to make China understand that we can live happily together, we can prosper together, and we should avoid war at all costs.
Absolutely.